So the stock market is crashing and the put options are printing. If you want to learn how to make money while the stock market is crashing, if you want to learn a very lucrative options trading strategy that can consistently make you money and generate big percentage returns, make sure you stay to the end of this video because I'm going to be showing you how you can profit from a market crash. On Friday, it was my most successful trading day of 2022 so far. I've already recouped my losses from the SPY. And with that being said, I'm going to be recapping that trade. It was a 400% return in a couple of hours on a day trade that I had on Lucid. Also made a 200% return on a swing trade that I had on Lucid. These Lucid put options printed like crazy. It was insane on how well they printed, and it was the exact same occurrence that happened on the 11th, on the Friday before this Friday. It was the same occurrence where everything crashed and everything sold off hard. And I told you guys and I prepared you guys. And with that being said, for those of you who are not in Trader Society, and you want to kind of get a feel on what it's like to trade live with me at market open, I'm going to leave a link in the description. It's going to be that second link down below where you can actually access the recording, the live webinar that we did. It's a recording, of that live trading session where you get to see me trading live and me using that strategy that I'm about to recap. So make sure you check out that second link where you can see this live trading session, because guys, I'm telling you, this strategy, it's life-changing. This is a game-changing strategy, and you can use this both ways. In this video, I'm going to show you how to use it on a market crash. So make sure you check out that second link. If you do want to learn more about Trader Society, that's going to be the first link where you can join and get started as soon as possible. So we're going to be recapping the trade. I'm going to be teaching you the strategy. Then towards the end of this video, we're going to be doing an in-depth price action analysis on the SPY, along with the top 2 stocks that I'm planning to trade this week. So let's get right into it. So in terms of Lucid, this was a 419% return at its peak in a couple of hours on the day trade. In terms of the swing trade, I literally sold that at the top. It was amazing on how well I traded this. And I was able to trade it so well because I based everything off I did based off of last Friday and, on the 11th. And everything, history repeated itself on the 11th. Like you could see right here, this is the 10th, right? And this is the 11th. And then you can see history repeat itself. This is the 17th. This is the 18th. Thursday, Friday, Thursday, Friday. See how the chart is nearly identical? So when people are looking at me like I'm some sort of wizard, like I have some sort of magic crystal ball that I'm able to trade this well, this is the beauty of having a strategy where history repeats itself, because when it does, you know exactly where your price target's going to be. You know exactly where your entry is going to be. You know exactly what to do. You know when to get in. You know when to get out. This is the beauty of this strategy I'm about to share with you here, because this strategy, I was able to maximize returns and make a 400% return on Lucid on some of my sells. Out of all my sells, it averaged out to be a 300% return with my day and swing trades combined. And I literally sold my swing trade at the exact top. Like it's unreal how I trade this, and I was able to trade so well because of the strategy that I'm using, and with this whole history repeats itself situation. And like I said, I really do encourage you to watch that live trading session that we did on Friday, because you're going to learn a lot from that as well. So this was alerted on Thursday. I picked up 2 swing trades. The first one was a Lucid put option at 54 cents. The strike was $28. I sold that for a 200% return. I literally sold that at the top when Lucid hit like $26. I sold those contracts at the top. With that being said, also had a swing trade on Snapchat. That was a much smaller win. Got in at $1.61, and then I sold that at $2.01. These I sold at $1.60. With that being said, check out the ads right here. 9:33 a.m. This was literally the high of day on Lucid. I added heavy size on my swing trade, and I also went heavy on these, and these were much more higher risk but much bigger percentage return. These were the ones that made 400%. At 10 a.m., so a little bit later, I picked up these at 19 cents. At the peak, they hit $1.15. And all of my sell orders, everything is here. It's all alerted within real time, and you can see it on the live trading stream as well, towards the stream we do at market open. But yeah, this was all alerted at real time. It was insane on how well I traded this, and it was purely based off of what had occurred on the 11th of that Friday. And a couple announcements that I wanted to share with you guys. So this whole micro scalping, forget this quick in and out micro scalps where we try to make a quick 10, 20, 30% return. Forget that. What we're going to do moving forward, I want to be very clear about this. Moving forward, we're just going to be trading the best setups at the best prices. Forget the in, forget the out, forget the micro, forget the quick scalp. What we're going to do is we're going to trade the best setups at the best prices at the major key levels only. So what does that mean? What does that look like? Just some quick examples. What are some major key levels? What are some great examples to point out? So in terms of Lucid stock, where is the resistance? Where is the high end of the channel? You can see right here, it's at $30, $30 to $29. It quickly goes back to 26. It quickly goes back to 26. It quickly goes back to 26. So if you want puts, you know where you need to be focused on. Not in the middle, not towards 27, not towards 26, not in the middle, towards the top, like I did on that swing trade. And then I added at market open, right? Same thing goes for SPY, right? We need to be trading these at the best prices. So in terms of the SPY, 457, your previous support. When that reacts as a resistance, you buy the puts. When that reacts as a resistance, you buy the puts. Right here, 446, key resistance. When that cracks this support and turns that into key resistance, you buy the puts. Key, major, critical levels only. Moving forward, those are going to generate the biggest percentage returns, especially if you're going slightly out of the money close to expiration. That's the plan moving forward. Let's get into the trade recap. So in terms of the trade recap, right? Lucid stock, how did I know and how was I able to trade this, so well, like nearly perfect? How was I able to do this, right? In terms of these ads, it was the gap close reversal strategy. The timing was alerted perfectly. Everyone was, everything was just so accurate on this trade. So I'm going to show you how I was able to do that. It was purely based off of history, and it was also based off of the strategy that I'm using. So what I'm going to show you here is confirmations, right? When I'm swing trading, swing trades, begin to be entered when the market is closed, right before the market is closed, because one of the confirmations that I use for swing trades is a daily confirmation. I like to wait until the end of the day to see where the stock is going to close, to see what the one-day candle looks like, right? So for example, I know Lucid is a very, very bearish macro stock right now, along with the market, along with SPY, along with stocks that follow the SPY, right? From a technical view, the reason why I know that is you could see there's strong support at 33 to 35 with big upside, right? Well, that cracked. And when it cracked, all Lucid has been doing is trying to fill the gaps. And there's a gap to fill right here at 24. It's even got some lower gaps to fill here at $18 to $20. And that's where it's going to be heading for the macro. It's just going to take some time. So in the meantime, it's been trading in a micro channel. It's been trading in this channel where it bottoms at 25.80 and then it shoots up to 30. It bottoms at 25.80, it shoots up, forms the lower high at 30. It bottoms at 25.80, it shoots up to 30, right? It's consistently failing to break out. It's forming new lower highs. It can't even go back to your previous strong support, which was right here. It can't even attempt to turn that into support, which is right here at 33 to 34, which means for the macro, this stock is going to get slaughtered and start to go back down to fill all these gaps that are waiting to fill below. So it's just a matter of time where this stock gets destroyed. So if I see a gift where this just ramps up, and this is what the market's doing, the market for the micro is flipping. It's flipping at key levels. It's flipping at micro key levels. Like for example, this is what's kind of occurring with all this back and forth news and drama and everything going around, where we all know within the macro, the market's going to continue to crash. But this is where you have to be focused on trading the key levels. SPY cracks through this key 457, it gets crushed, and then it rips back up, turns previous support into resistance. That's your new level to short. That's your new level to short. And then you can see right here, previously, there was a channel from 420 to 444. This key 440 level was the high end of this channel, and you can see it turned into support. So once that cracks and turns back into resistance, that's going to be a great opportunity to buy the puts and ride this back down to 429, right? So when I noticed that this was turning, SPY was turning this key resistance, this key support back into this key resistance, and the bearish candlestick came in on the daily, it was an obvious short, especially when this cracks 435 and turns that into resistance. It's going to head back to low 430 to 429. So I went with Lucid because Lucid was at key resistance, right? So in terms of the swing trade, I'm looking at this on Thursday, right before the market's closing, and I'm saying this is a no-brainer. The reason why this is a no-brainer, look at the confirmation. Lucid is at that key resistance. It's forming this bearish death candle. It's a very, very bearish candlestick. That's my confirmation. So for swing trades, you got to wait until the market's closed so you can see what the daily candlestick looks like. My confirmation is here, and I'm also looking at SPY. This is another confirmation. I'm looking at SPY on this whole idea, and I'm saying, SPY used to have key heavy resistance at 444. You guys remember this was key resistance at 444, where this would tank quickly to like 425 in the pre-market. I remember it did that a couple times. Well, here we go. It reacts as support. It goes to 457, reacts as a resistance, reacts as a resistance. Finally, you get that bearish candlestick coming on the daily, and the squeeze indicator turns dark blue. And you guys know when this turns dark blue, these stocks tend to crash the next day. They tend to sell off from a macro point of view. That's when the macro kicks in, right? And you could see the next day was a massive sell. This is a bearish death candle. When you get that confirmation that 440 support is no longer support and it's now resistance, you got this bearish candle, SPY is going to repeat history and start to crash like it did. So it was that same situation where, stocks crashed on Friday. Think about it. Who wants to be long? Who wants to hold stocks, right? This is another reason. Think of all the selling pressures. Who would want to go long over the weekend and buy and hold stocks? They're going to be selling. They're going to be locking in profits or cutting losses. They're going to be getting out of positions, especially on this long weekend with the President's Day. Like, nobody's going to want to do that. So with that being said, that also is creating sell-offs. And if you've been paying attention, SPY has been selling off and stocks have been selling off on Friday, and contracts expire on Friday. So you can make very lucrative returns with these put options like I did on Lucid Trade on Friday. It was the same thing I did on Friday, except this time, instead of selling out, instead of cutting losses quickly, I wasn't even down in terms of, this Friday, I wasn't even down on those trades. But instead of, last Friday, you guys know I bought Lucid puts on last Friday, I cut my losses quickly. And unfortunately, those puts that I bought, 20 cents, that was my average, I got out at like 15 cents. They went to $1.40. But guess what? I came right back and I learned from my mistakes. And I ended up, selling those put options, got in at 19 cents. So I got a better average. Same exact trade, except this time I ended up selling those at 60 cents, 70 cents, $1.10. Amazing sells, 200 to 400% returns in between those, average to 300%. So with that being said, that's the confirmation that I use on the daily. Now, in terms of the day trading, why did I decide to go heavy on these as well? Again, words I don't throw around loosely are heavy position size and full confidence A1 setups. That's what I'm only looking to trade moving forward. Why did I decide to, alert that I was heavy on Lucid puts with my swing I added? And then I also bought these a little bit later at 10 a.m., the higher risk, more volatile, bigger percentage returns, right? Why did I decide to buy these right here at 19 cents, $27 out of money, slightly out of money strike, February 18th? Why did I decide to buy those at 10 a.m., right? That was the one that hit big too. Reason why is, looking at the chart, history is repeating itself. If you remember what happened on the 11th, the Friday before this Friday, the market crashed. And if you look at what happened, I'm using my gap close reversal strategy. Lucid stock already crashed to $27 in the pre-market. It already dropped $1 in the pre-market. And as soon as the market opened, Lucid spiked and it filled this gap. There was a gap to fill at 28.12. And you guys know what I told you. When you see stocks have big sell-offs like Lucid did in the pre-market, right? It had a big sell-off. It already dropped $1. And they rip back up to their previous closing prices. And you see them react as a resistance level. What does this look like to you? Does this look like a resistance level when it hits this PCP strategy? Does this look like resistance forming lower highs? Yes. Pick up the put options. That's exactly what I did. This whole idea that the market was going to crash on Friday, comparing it to last Friday, repeated itself. And this time, like I said, instead of cutting my losses, instead of not being patient, I did the complete opposite. I added, I held, and I did a great job of maximizing my wins and locking in profits. This stock ripped back up, and it's a good thing I locked in those profits because I would have nearly given back the vast majority of my profits if I didn't do that. But I locked them in at the perfect timing, and I was able to do that by using the charts, by understanding that, Lucid is held up on thin air. If you look at this 5-day chart, all it has to do is crack 27. That's all it has to do. See how there's support at 27, there's support at 27, there's support at 27 right here in the pre-market, right? Well, guess what? Once it cracks 27 and reacts as a resistance level, like it did right here, see how it's turning it into a resistance level? Where's it going to go? It's going to go back to the next support level. And this is your next support level. This massive rip right here, this is not support. This is just a spike. So the point being is when it cracks this support level right here at 27, it's going to crash. It's going to crash hard. It's going to go to 25.60. That's your next support level. You can see how hard it's crashed because it's held up on thin air. I showed you the 5-minute chart. It's held up on thin air. There's no support till 25.80. Look at how quickly it crashes. Every time this crashes and cracks 27, for the most part, it goes back to 25.80, 25.80, 25.80, right? You get the point. So that's where my target is. That's where I'm looking to get out. Big shout out to, one of the students that we have within Trader Society. His plan was so on point. It was so on point. Let me see if I could find that message real quick. He had such an amazing plan on Lucid, and he called out the key level perfectly. Like it was just amazing on how well he called it. So yeah, I can't find it. It's like buried in there. But the point is, like, he literally said, when this hits 25.80s, that's when I'm locking in profits. And as soon as it hit 25.80s, it just ripped back up. And the daily chart is what told us that was going to occur. When we see these big moves, you're going to see some micro moves, and you don't want to hold through those little micro bounces. You want to lock in profits at key levels, right? So that was kind of the strategy. That was the idea behind Lucid. It was a gap close reversal. You had the bearish candlestick on the daily chart. It gapped down in the pre-market, and then when it shot back up to the previous closing price, that's your confirmation to add to your position, right? So when you see the massive sell-off, rips back up to the PCP strategy, this line right here, bearish confirmation, 933 right here. So see, when I get this confirmation right here, I add to my puts here, I go heavy, and then boom, the stock crash. And then once 27 cracks and reacts as a resistance, this key level right here, it's held up on thin air. So when you see this key support with big upside right here, reacts as a resistance, I'll see how it cracks, reacts as a resistance, reacts as a resistance, reacts as a resistance. When you see that occurring, you know it's going to sell off hard, because looking back at the chart, it's held up on thin air. Look at the 5-day chart. This is held up on thin air. When it cracks this key 27, your next support is all the way here in the 25.80s. The daily chart is going to tell you everything along with those pre-market extended hours chart. That was the trade. History repeat itself. Gap close reversal strategy in terms of the day trade, in terms of the swing trade, bearish confirmation at a key level. Also, market was supposed to sell off on Friday. So that's kind of the trade recap in that sense. You know what to do in terms of the put options, absolutely printed. So with that being said, let's go over these trades. Let's go over these strategies. So in terms of SPY, what are my thoughts on SPY? So in terms of SPY, what you need to understand is for SPY to sell off very, very hard, it needs to crack 430. 430 is your key level. It needs to crack 430. If it can crack 430, it should drop to about 427 is what we're looking at. 427, a crash to 427 once 430s can cracks. In the meantime, I would just wait to see how it reacts at 435, right? So I would kind of look to see how it reacts at 435. But if it does crack 430, then I'm going to be playing key breakdowns on stocks. That's what I'm going to be doing if it cracks 430. If not, I'm just going to be waiting. So the plan is, if it cracks this, if SPY starts to downtrend, the plan is going to be to buy puts for key breakdowns on stocks. If not, if it starts to rip, then I'm just going to be waiting to see how it reacts at 435. That's kind of my overall analysis for the SPY. In terms of Snapchat is looking very, very bearish for a swing trade. I think if you give yourself some time on some puts, give yourself a couple of weeks, I think these puts are going to print. We have the blue has now triggered on Snapchat. The dark blue has now triggered on Snapchat. This looks so bearish. With that being said, it should continue. It's at key resistance. There's a gap to fill here. There's a gap to fill here. Snapchat has some downside coming. So I would consider swinging some puts and giving yourself some time for a passive income trade. With that being said, here's another idea. But with this one, I want you to go even longer term. This one, like months. I would go months on this one. There's an idea that, Crocs, I'm just not buying this. This whole run up from 70 to 180, like, I don't think this stock is worth $80, especially in the current market we're in. Like, this just looks so bearish. Crocs looks so bearish, right? I mean, with that being said, I'm waiting right now. I'm waiting for some sort of bounce to buy puts on. I mean, the best price would be $100, but this one, I want to get like a long-term put option trade. I'm just not buying this whole run up. I mean, in 2020, this was at like $11. The stock's got to come back to reality. And in terms of where reality is around $55, $60 midterm. So I'm waiting to do something on this one, not doing anything yet. And then my next play is just going to be Lucid again. That's all I'm really seeing. Like my next play, I'm telling you, these Lucid puts are making more than SPY puts. With that being said, so now that we're at key support, one thing that I'm looking for is a key breakdown. Once this cracks 2580, this is gonna sell off hard. This is gonna sell off very, very hard once it comes back to 2580. So with that being said, there's going to be a key breakdown put opportunity. So basically what I'm telling you is like this information that I'm giving you right here can make you a lot of money if you know how to trade it with the put options. All that I'm telling you is this is what you have to do. Pretend this is 2580 right here. Pretend this is 2580, this right here. See, okay, so just pretend it's 2580. 2580, it rips up, key support, big upside, right? When it cracks 2580, so this red line here, think of this as 2580. When it cracks 2580, buy put options. Or, you could take a starting position, right? Or what you can look to do is wait for a channel to develop. This is going to be your best confirmation. So remember this. When it cracks 2580, wait for it to bounce back. When you see it bounce back, and it's starting to form resistance. If it's forming resistance at 2580, then it's pulling back again, forming resistance at 2580, and it's pulling back again. Buy the put options. See how once this 27 level key support, big upside, right? See how when it cracks, and the best confirmation is wait for it to bounce back up, wait for it to prove that it's resistance, proves that it's resistance, proves that resistance, then it's going to sell off hard. And when that hard sell off occurs, your puts are going to print. So what I want you to do is, when you see, it has to be that confirmation though. You have to get that confirmation. If you see that confirmation on a key breakdown, buy the puts, and then same confirmations at key resistance. So now we're closer to the key breakdown. So wait for the key breakdown at 2580. In the meantime, wait for a pushback up towards resistance. That's kind of where I'm at in this overall market. So as you can see, there's not going to be a lot of trading going on. If you look at the trading opportunities, there's a buy, there's a sell, there's a buy, there's a sell, there's a buy, there's a sell, there's a buy, right? So it takes time. And that's that whole span that I just showed you was within like 3 weeks of trading. You're looking at like 6 trades, right? So that's what I'm planning to do moving forward, just trading the best setups at the best prices. And that's going to be the plan. So like I said, since we're closer to the key breakdown, set your price alerts, wait for the key breakdown. In the meantime, look for other stocks at key levels. And if it rips back up to resistance, we know what to do. So that's the whole plan on Lucid. But I'm telling you, when it cracks that 2580, puts are going to print. It's going to see a nice pullback. And you might be wondering, well, where's that? How low is that nice pullback going to be? I'll tell you, it's going to be right here, $24.30. When this cracks 2580, hard sell to 2430, put options 200% plus easily. That is all you need, guys. One of those a week. That's it. That's all we need, right? So we just hit big. We just hit a big one at key resistance. And right now we're at key support. So we got to see what it wants to do. We got to see if it wants to bounce. I'm just going to kind of chill a little bit. I don't feel comfortable really buying right now in this whole market conditions. So I'm just going to chill a little bit, see if it can get back up to resistance. Most likely not. But if it cracks, then I'm getting in. If it cracks that level, we see that confirmation, then I get in. And at some point, it's going to crack. So this trade that I'm mentally preparing for, this is something that can take my portfolio to the next level. I mean, we're talking, I think if say you had $1,000, say you had $1,000 in your account, and these puts, say they're 20 cents, so it's $20 a contract. Say you put in 20% of your account. You take 20% of your account into these put options. You have a $200 position, right? With that $200, that can quickly turn into $600 to $800. That's just the reality. It can quickly turn into $600 to $800, and you're only putting in 20% of your account, and you don't have to put in that much. And in terms of your risk, you can risk, out of that 20% on your account, I would say like a max risk at like 5%. So basically, you're risking 25% of the contract to make, to make a very, very big return on your account, right? But I would size in a little less than that. All depends on your risk tolerance. But I'm just saying with these best setups, best price trades, these are something where I'll take a decent size in, and I know my max risk, like most I feel comfortable risking on my portfolio, would be like 5% or maybe a little higher. It depends on the trade, depends on the setup, maybe a certain trade, maybe 10%. It all depends on the case scenario. But these are high quality setups, best prices at, it all depends on how fast you want to grow too. You got to do the math, do some math, break down some numbers. How fast do you want to grow? right? How fast do you want your portfolio to get to that next level? What are you comfortable with risking to get there, right? I wouldn't try to get it too fast, right? I would play it safe in a sense, find a good balance of not too fast, but also not too slow. These people buying and selling stocks, these people investing in stocks, they're not making any fucking money. The reality is they're just not, they're really not. Especially in the current market that we're in, the people who are going to be making money right now are going to be the day traders. The day traders are going to be the strategic ones, the strategic day traders. Those are going to be the people who are going to be making the money. Strategic day traders and, very short-term swing trades, like a very short-term swing that I did on Lucid, right? Midterm and long term is going to be challenging. If you have puts, those can do well. But I'm telling you, I'm just going to focus on the trades. Just focus on these day trading opportunities. At some point this year, there'll be a good opportunity to buy some leap call options. Just not anytime soon. Got to wait on that. But I'm telling you guys, if you do what I gave you in this video, you focus on those key breakdown levels, you focus on those key resistance levels, those previous closing prices, the strategy with the options, you should do very, very well. So with that being said, I'm going to be closing this video. Remember, we got to trade less to earn more. So in terms of the style, right, in terms of the trading style of trading less, earning more, major key levels only, right? So major key levels on stocks only, major key levels, major key resistance, major key support, gap close reversals, PCP strategy, previous closing price, and also expiration, very short term, right? So very short term expiration. You can go with a couple different contracts, slightly out of the money and at the money. That's the plan. That's how we're planning to do it. Basically what I did on Friday is all I'm really planning to do moving forward, right? I just got to keep staying focused and trading those setups only. It was perfect, guys. It was literally, that's what the best setup looks like. And I'm telling you, I made the same exact trade on the 11th, on the last Friday. I just got spooked out and I learned from those mistakes. I didn't get spooked out. I added when it had that little morning spike, and I went heavy and it worked out very, very well. And I put my account back on top and more. So with that being said, guys, that is the plan, to trade the best setups only at the best prices. So, if we just look in terms of when that occurs, right? So some interesting levels, just to show you some examples on the SPY. SPY has key support right here at 457 to 450s. When it cracks that, it's going to be a great opportunity to buy a put for the key breakdown. You can see massive sell-off. That's a phenomenal trade. When it rips back up, 457, this is your key support level. You see it react as a resistance, buy the puts. You see it react as a resistance, buy the puts. Here's the bearish confirmation on the daily, buy the puts, right? Remember, this was the last Friday confirmation, same confirmation right here. So look, same confirmation, 457 support, bearish confirmation, massive sell-off on Friday. 444 support right here, used to be resistance. SPY dropped off to 430 very hard the next day. Well, look, same confirmation, bearish candle, bearish candle, bearish candle, boom, sells off hard. 440 failed to break out 3 times, previous support, now resistance. You know the sell-off's coming. See how predictable it is. So what you have to do is, and what we need to do is, moving forward to really kill it, we have to wait. We have to wait for these stocks. We have to wait for them to go back to their key critical levels. So in terms of opportunities that I shared with you, in terms of really amazing trades, okay, so this is since January. This is since January 10th, right? So January 10th till February 21st, we're talking about a month and 10 days. We're talking like 5 weeks. So in 5 weeks, how many amazing trading opportunities was there on the SPY in 5 weeks? How many was there? There was one right here at key resistance. There was one right here to key breakdown. That's 2. One at key resistance, one at key breakdown, 2 opportunities. One at key resistance right here, that's 3. That's not 3 because that's not a confirmation. So that's not 3. This is 3. This is confirmation. That's 3. Key resistance. Key breakdown, that's 4. Key resistance, right? Now support, key breakdown, that's 5. There was 6. There was 6 phenomenal opportunities to buy puts in the last 5 weeks on the SPY. That is 6 trades in 5 weeks, right? Those are game-changing trades. We're talking 200 to 400% returns. If you find stocks that are at better levels that generate bigger percentage returns than the SPY, we're talking 6 phenomenal trades within the past 5 weeks. Those are the key levels, right? And you can also play some on the long side. In terms of the long side, the only one that I personally would have liked and considered would be like right around here. Looking back, like these just aren't good levels. When SPY typically drops 10%, it was a 10% crash from all-time highs. It does tend to have a micro scalp. But with that being said, there was 6 put opportunities, and you can also look for long opportunities, but I've just mainly been focused on puts right now. So with that being said, guys, moving forward, let's get like 1 to 2 amazing trades per week, and that's it. That's all we're gonna do. Just dialed in on the best setups, trades like Friday, 1 to 2 a week. That's the game plan. Nothing else. Trade the best setups, only the best prices. I will see you guys tomorrow live at Market Open. The first link to join Trader Society is going to be that first link in the description.